Hello traders and welcome to another video review. Today is Friday 16th of September 2022. Let's take a look at the Forex calendar first. Last day of trading is full of events, so let's take a look which one might trigger some moves on a certain path. For example, we have a scheduled data release from the UK. Core retail sales and retail sales are scheduled for release at 8 a.m. As you can see, the retail sales are expected to drop from 0.3% to minus 0.5%, which is not absolutely good for the British economy. CPI index from the Eurozone is scheduled for release at 11 o'clock together with the core CPI. The core CPI is supposed to stay at the level of 4.3% and the CPI at 9.1%. Any increase here any increase in the CPI will likely indicate that the further interest rates hikes from the ECB are on the table. So please watch the CPI today. During the New York session, we got data from Canada and from the US. From Canada, we got housing starts, further securities purchases, and wholesale sales. All of this data are scheduled for release at 2:30. From the US, we got Michigan consumer expectations data, Michigan consumer sentiment. For crude oil traders, we got US Baker and Hughes oil ring count. The rest of this are, of course, futures position data, so we won't bother about them at all. So a pretty intense day. Much more important data are scheduled for release during the London session: retail sales, UK, and CPI from the Eurozone. So let's start our technical part with analysis of the British pound, and then of course we will take a look at the euro dollar. For our chart of the British pound, looks like the bears are back in town, and they are back big time. Why? Because this massive sell-off candle triggered, of course, a continuation move. Then we had a bounce towards the 30 period moving average and the technical resistance 1.1599. Didn't happen. The bounce ended with the pin bar, and since then we have another wave to the downside developing. Now the key technical support 1.1410. This is the 7-year support, and it looks like the market wants to hit this level, but the drop is not that dynamic. Nevertheless, momentum is negative. Momentum is strong. I mean, the strong to the negative side, which means that the bears have control over the markets, and we should see lower levels soon. So the outlook remains bearish. If there is if the data are worse than expected, we should as well expect the market will trigger a move to the downside towards 1.1410, and the reaction on this level is very important. The first reaction was rather positive. We got a bullish engulfing and 2.85% bounce. How it will be today, we are not quite sure. The yesterday's low is 1.1450, so we are trading 8 pips from the yesterday's low. The sentiment is clearly negative. Please prepare for the penetration of the lower levels. What is going on the British pound to Japanese yen? The British pound to Japanese yen made a pin bar on a 4-day chart around the level of 167.50, and on the daily time frame chart, as you can see here, we are back with the negative candle, the down candle. That is not kind of a pit bar. However, you could say that this is some bearish candlestick pin bar pattern. We have the confirmation and we have the extension. So today we should expect the market, let me just this line should go a little bit there you go. The trend line has been extended. The market should drop towards the technical support 163.93. This reaction on this technical support might be critical for the next market move. So blue arrow goes here, and please remember, this is how we are trading right now on the British pound to Japanese yen. This is the price action. That's the technical support. The daily moving average is of course here. This is the 30-day moving average around 162.98, and just below it there is this trend line. As you can see, it's a valid trend line because market is breaking above it if it wants to move it of course through. So if we break below 156.93, then the dynamic support is trend line and the moving average, and then there is nothing until 160.38. So the outlook remains bearish, and the momentum aggressively reversing towards the level of 50. So the 50 will be around the neutral. The neutral level of 50 will be around the 163.93, which is again very important level on the daily basis. Because we have data from the US, let's find out what is euro dollar doing, and of course we will switch back to the 4-hour chart. On the 4-hour chart, we can see that the volatility to the downside has been subdued. We retraced 61%, big sell-off, and now we consolidate in a very, very narrow range. The intraday support is located around the yesterday's low, around the level of 9,959. So that's the intraday technical support. The resistance is around the level of 1.0019 with the occasional spike to 1.0024. Spike like this might happen, but it's always very important where the candle closes. We are below the 30 periods moving average on the 4-hour chart, so right now we are waiting for some trigger. It looks like the negative momentum, weak momentum, most likely will trigger the continuation wave to the downside. Next technical support 9,934, 9,901, 9,867 is the last one is the lowest level in many years. So outlook remains bearish on the euro to the dollar. Let's find out euro to the Japanese yen, what is going on here. I will switch to the daily, back to the daily. As you can see here, market hit the extremely overbought conditions on the daily time frame chart, 74 points, just above the highs from the June 2022, around 144.19. So looks like a kind of a, it's not a pin bar. I mean, again, they are not that easy to interpret the candles on this chart. However, the high was made at 145.58. Then we have the downside developing. The level of 138.31 will act as a technical support, and there is one more technical support. If we are going to be so picky, it's around the level of 142.2528. So this is the technical support on the daily. If we break below this technical support, then the level of even 158.51 might be tested in a few days. So please keep an eye on this level, 142.2825. This is the technical support on a daily and intraday technical support as well, because in that situation that's the only level we have here. We broke above this trend line, as you can see, so we don't need it anymore. It's empty trend line right now, tested, and it's not that valid. However, we might place another trend line here, and what do we see here? Something like this. Maybe this might be some sort of the channel. The trend on the higher time frame remains, well, it's an uptrend, of course, but it's not that aggressive anymore. So except the last rally, this trend is not that aggressive. There was some kind of a correction, big correction here. Of course, there was some kind of a distribution here. So please expect this market to perform some sort of the pullback, some sort of the correction, especially if 142.28 is violated. So that's the S&P, that's the euro to the Japanese yen. Let's find out what the S&P 500 is doing. Daily time frame chart on the S&P 500 broke above the local trend line, closed below the trend line, and it is right now heading towards the local technical support. This technical support is of course very narrow. There you go, it tested this support. So 3,888, this is the level. If we break below this level, okay, maybe I will leave my arrow here. If we break below this level, the market is below the trend line, below 30-day moving average, far away from the 30-day moving average, and this market might test the lower technical support levels. The next zone for the support is 3,739, 3,726, and then the last resort, the last technical support is 3,634. So from the if we take a bigger picture look, then you can clearly see that this is technical market trending towards this long-term trend line, and that rally was in three waves only. So that was just a correction, and the main trend currently on the lower time frames, like a daily, is down. So please expect lower levels on the S&P 500. And last but not least, let's take a look what is doing Bitcoin. Let's switch to the 4-hour and zoom in. What do we have here on Bitcoin? Well, after the bearish engulfing, this big pattern here that pushed the prices below the 20,000 again, we have a slowly we have been developing the down moves again. Lower low, lower low, lower low, lower high, lower high, lower high. For me, definition on a very small trend. So what do we have here? Maybe if we put this line here, it will be much more easy to notice that. Of course, the lows below 20,000 are being bought back up, because we have one pin bar here, we have another pin bar here. This is the set of the pin bars. However, the market is truly trending down, because this RSI indicator doesn't even bounce from the level over 30, occasionally 35. So strong bearish pressure, and we will likely see breakout below 90,629 towards 18,940, and 18,563 will be tested, and this is the level from of course, this is the level from this beginning of the September, the 7th September low. So it might be tested easily without any progress. We just wait for this market to squeeze even a little bit more and then trigger the move to the downside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.